Why wouldn't Russia, or would they sell some of their gold to get out of this mess?
Well, the only way to freeze gold reserve, we're talking about physical bullion, by the way, that they have in Russia. Apparently, some of it's outside of Russia. I don't know exactly how much, but some of it may. It's foolish to leave your gold with the Federal Reserve or the Bank of England because that's just, might as well just sign it over to the exchequer. But most of it's in Russia, but some of it is not. But the only way to freeze the physical bullion in Russia is to leave it out in the cold because that's the beauty of physical bullion, which is it's not digital, it's not in some account, and you can't freeze it. Now, what they did, just to be a little bit technical, Daniela, the pending legislation says, well, yeah, we can't actually seize the gold without sending the 101st Airborne into Moscow, which of course we're not going to do. But if you sell the gold, we're going to freeze the proceeds. So it immobilizes the gold. It's actually what Goldfinger was doing in that old James Bond movie from 1964. Everyone, at least in the movie version, everyone thought Goldfinger was going to like take the gold out of Fort Knox. That was not the plan. The plan was to make it radioactive so it couldn't be used, and then that way he could corner the market. So what we're saying is, if you sell the gold, we're going to seize the proceeds, so therefore you can't sell it, therefore it's no good to you. That has some impact, but it's not exactly true, and here's why. You can put that gold on a plane, fly it to China, and unload it in a secure PLA Air Force or Air Wing base in China and use it to pay for whatever you want. So you can. It's either barter, or if you want to say gold is money, which is how I look at it, it's just delivering the cash in gold form.
So getting back to the point about this, Russia, China teaming up, I mean, or other countries now looking outside of the U.S. We already see it with Saudi Arabia in discussions to start using the Chinese yuan. What's the next step? Let's talk about, does this fast track the digitalization of coins coming down the road here, Jim?
Well, yeah, I mean, I point out that the dollar has been a cryptocurrency since at least 1979. That was the last year the Treasury issued a paper treasury note, like you had a note. Maybe somebody's grandmother still has an old one in the attic, but they had little, almost like stamps, like you peel off a coupon and take it down to the bank and get paid. That the last time they did that was 1979. So the dollar has been digital, and message traffic has been encrypted since around 1980. But I think in terms of the impact on the dollar, this is be careful what you wish for, and this was exactly what I was saying earlier in terms of second and third order effects. And I warned the Pentagon about this, and I warned the Treasury about this because I know how economic sanctions work. I've been very involved in that from the point of view of the intelligence community and also advising the government. But they can be powerful, but if you use them too much and too broadly, they actually lose all their impact because the people you're targeting say, well, okay, no mas, I'm out of the dollar system. You've done it one too many times. And this is an example of that. We've never frozen a central bank before. We have now. We've never kicked an entire country out of SWIFT with the exception of Iran, but that's a much more isolated case. We have now with Russia.
Another area I want to explore with you, Jim, is currencies. The U.S. dollars surge, a lot of fluctuations happening in currencies, and I'd love to hear you kind of share your views on the U.S. dollar, maybe the outlook there, and maybe just currencies in general. Would love to hear what you're thinking about.
Sure, thank you. That was my first book, Currency Wars. That was a national bestseller. And I went through the dynamics of that. Now, that was at a time when the US dollar was at an all-time low. August 2011, just read, the book came out in November, but August 2011, the dollar was at an all-time low. And not coincidentally, gold hit an all-time high at the time, $1,900 per ounce. It's gone higher since then, but at the time, so dollar's low, the dollar value of gold is high, all-time high. Makes sense, right? Because I always say gold, people say gold's up or gold's down. And I say, no, gold's not anything. It's metal. It's atomic number 79. What changes is the value of the dollar. When people say gold is up, what they really mean is the dollar is going down, which is the case. Today, we're in the opposite situation. And by the way, gold prices have been coming down, rallied a little bit recently, but it's down from $2,040 an ounce in early March 2022 to today it's around 1750, give or take, but it's been as low as 1650 fairly recently. But that's what you would expect if the dollar is this strong, which it is. So the dollar's not at an all-time high, but it's getting there. It's the highest in over 20 years. People talk about the euro at 98 cents. That's about where it is. I was skiing in the Swiss Alps and French Chamonix on the French-Swiss border in 2000, and the euro was 80 cents. And that was the all-time low for the euro. And we had vacation, two family. We'd go out to dinner, have like a 4-course dinner and wine and tip and everything. We couldn't spend $100. We tried, but we couldn't do it because the euro was so cheap. We're not quite there, but we're getting closer to that level. But what happened the last time the dollar was this strong before 2000? Well, it was 1985. That was the Plaza Accord. And that was back when, it wasn't there were 5 people there. It wasn't exactly the G7, but pretty much of an overlap. And James Baker convened the meeting at the Plaza Hotel in New York with the finance ministers of, Japan, Germany, UK, France, and I believe Switzerland was there. And they orchestrated the decline of the dollar. The dollar was too strong. It was hurting U.S. exports. It was importing deflation, believe it or not, because we were trying to get, but by then the inflation had died out by 1985. It was down to around 2%. So we were importing deflation. They didn't want that. And so the question today is the strong dollar. Well, the strong dollar is doing the same thing. I looked at the markets recently, and what I saw was, stocks were down, bonds were down, gold was down, silver was down, the euro was down, NASDAQ was down, everything was down. And I said, how can that be? I mean, some things go up, how can everything be down? And the answer was the dollar was up. And everything I just described, oil was down also, but everything I just described, oil, copper, gold, stocks, etc., they're all denominated in dollars. So it shouldn't really come as a surprise if the dollar is that strong, that the dollar price of everything else would be lower. And it's a very deflationary trend. And by the way, that's another contributor to the deflation, which will soon replace the inflation that we just talked about. But here's the hard part. Janet Yellen doesn't know anything about this. I mean, she's a labor economist, sort of, and a statistics geek from Berkeley. She doesn't know anything about monetary policy. It turns out she doesn't know much about fiscal policy either. She's running around talking about equity and climate change, so that's fine. But there's no James Baker. There's no George Shultz. Where's the leadership and the gravitas and the authority to be what Tim Geithner, and I talked to him about this, he calls it the convening power. Convening power doesn't mean you can force all the solutions, but it does mean you have the authority to convene the meeting, bring a group together and talk about it. So where's the leadership? Where's the convening power to have a new Plaza Accord? Can we stabilize exchange rates? Can we bring the dollar down a little bit? Can we just put gold back in the equation? Maybe not a strict gold standard, but just as some kind of benchmark to help us think about what we're doing independently of other currencies. And by the way, most currency indices, so a DXY, which the Wall Street Journal uses, Bloomberg Index, the Fed has a couple good indices I use. All of those indices tell you if the dollar is stronger or weaker compared to other currencies. And it's heavily weighted to the euro. And yeah, the euro and the US dollar together are 80% of global reserves. And so that makes some sense, but you're in a bubble. It's currency to currency. Well, what if they're all going down against something else, or they're all going up against something else? What's the something else? What is the benchmark or the yardstick that we can use that's not a currency? And the answer is gold. I mean, that's you get accused of being a gold bug or whatever, and I don't expect a gold standard anytime soon. But just objectively, analytically, that's the only thing you can use as a yardstick that's not another currency.